macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Well, if anyone has had this market well-timed this summer, it seems to have been our own tactical trader, Kevin Cook, starting off in May with a sideways to lower call when the S&P 500 was near 3.5-year highs. And he said the summer sell-off was not over. On June 30th, after the S&P bounced off at 1,200 and went back to 1,340, then the first week of August, after key support levels were broken. He said that the market was headed below 1,200. Finally, in the past 2 weeks, he told us to get long the relief rally off of support at 1120 and look to sell near 1220. Well, Kevin, you are back once again with that popular S&P chart of yours.
Yep. I can't get away from it. It's the theme.
and what you think is very interesting. Low risk opportunity to get long the market again. Is this another relief rally?
It could be, but it could also be a near-term bottom in this stock market. You know, we've priced in a recession, but we don't know if there's a recession yet. We're still waiting for more data.
Right.
And money managers are looking forward, 2 quarters. What's really going to happen with the economy here? We've also got the European threat, and if there could be one catalyst that kicks us over the line into recession, it could be Europe falling apart here.
Yep.
So, but this week, there's optimism about this Obama jobs plan.
Yeah.
And actually, this morning, I guess a little bit got leaked out, or something got revealed that it could be a $300 to $400 billion stimulus plan. Who knows if it'll go through? But we actually have a rally going on right now.
Yep.
What's interesting is the chart I'm going to show you. I actually took a snapshot of the S&P yesterday on the close. So this is from September 6th, and what you can see is that the S&P closed at 1165 after going down and testing that 1135 to 1140 area. Bounced off of 1140, and you can see the dark line I've drawn back to the 26th of August. So it basically, the market went down there and was rejected and came back up. Now, so yeah, we traded this relief rally for the past 2 weeks from 1120 all the way up to 1220. It was a lot of fun, made some money. Now we've come off, and the market had a surprising reaction. Goes down, it sends a probe down to 1135, and buyers at 1140, sort of a reversal on the day. Oil was higher, and now look what we have. So this chart doesn't show it, but the S&P this morning, as of 10:30 Eastern here on Wednesday morning, the S&P has been as high as 1187. So there's some kind of tradable rally in store here. The funny thing is, so this is what I was going to show you, the chart I was going to show you this morning. I mean, it's already taken off, right? We're already 20 points higher on the S&P. But these are how these things sneak up on you. So if you just looked at the close yesterday, you saw, hey, there's some support down there, and institutional players are buying the market. The chart tells you what are they doing, right? I don't just look at charts and say, oh, and try and make a crystal ball forecast about where the market's going. I look at the chart and say, this is what the big money is thinking and what they're doing.
Okay, so this seems to be an opportunity. That being the case, what are some of the different ways investors and swing traders can play the opportunity?
Yeah, so remember last week we talked about how the market will definitely fool most of the people, right? And so in this case, maybe some people have gotten fooled. They got short, and now this market's running away from them. So that's where you have to be counterintuitive and think like a contrarian, and sometimes buy the fear or sell the greed. In this case, we don't know how this is going to unfold here, but the market seems to be telling me there's some strength here, and there's some optimism possibly about this Obama jobs plan. So the way I played the last rally that we had from 1120 up to 1220 was I was buying something called the UPRO, which is a 3 times leveraged ETF on the S&P 500. There's also TNA, which is a 3 times leveraged ETF on the Russell 3000. Now, if you don't want to play with those leveraged ETFs, and I don't think anybody should unless they have some experience with it, you really want to be looking at buying your favorite stocks down here. Good quality stocks. Look for Zacks number 1 and number 2 ranked stocks that you think are going to do well here. If this Obama jobs infrastructure plan is for real and it goes through, it could be good for material stocks, industrial stocks, energy stocks. I still Love the fact that oil is above $80. So I think you want to still be looking in those cyclical types of areas: energy, industrials, and materials, and take a stab at the leveraged ETFs on a small scale if it's something you want to try, either UPRO or TNA.
Do you expect the market trend to become any clearer after the details of the plan are revealed?
We still won't know if we're in recession or not, but we will have confirmation about what the market perceives about the stimulus. Is it overall a good thing? Is it going to happen? Mm-hmm. And so we may not know that for sure until end of this week if the market views it favorably.
Okay. He's Kevin Cook. He's our tactical trader. He's also our senior stock strategist at Zacks.com. Follow his columns on Zacks.com or follow him on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.